Hi everybody, Eddie here. So this is my second attempt to try to make this video. I did a really long one earlier, and I forgot to turn my mic on. So this is my second attempt to try to remake this. Before we start, make sure you like, subscribe to the channel, hit that bell icon to get the latest updates. It kind of helps with the algo and helps me expand this channel. Anyway, let's start with SPX. So we have a rejection week in this big giant megaphone channel. So we see right here every single time we hit this upper range of this trend line, we get rejected. So once here, once here, once here, and again rejected right at that resistance area, right on the trend line, right? So it did briefly break out of this 200-day moving average, hit the trend line, got rejected, and came back down. Right now we're holding on to this key support around that 3,900 area. Next week is FOMC. So what I suspect for next week is we're going to pretty well go sideways until FOMC. Usually it rallies up towards the FOMC, and then after FOMC kind of tanks down. So let's see what happens this FOMC. So this scenario is if we rally, it's aiming for this 200-day moving average right here, which is also the upper part of the breakdown channel, the lower part of this breakdown of the channel. So we could come up, retest this, right? And then JP could start talking, and then we tank. Or we come down, test this area right here, 3,900, and then if JP start talking, we could rally back up, right? So it can go either direction. Usually it's a rally towards FOMC, and then it tanks after, right? So just keep an eye out on that. The key levels to watch for this 200-day right here. If it breaks above here, we're going back up and test this 4,100 area. If it doesn't, we're going to come down and fill this gap down here. There's a big giant gap right here that needs to be filled. All right, your key support is 3,900, aiming for 38, and then after that is 3,750, right? So these are your key levels to hold for next week. If things are bad, we break down, look for that that gap support, which is at 3850, 3860, 3855, 3860, sorry, 3860. And then we enter the gap right here, and then that's a big gap that needs to be filled. And that's 3750 to fill it. All right. So those are areas that you want to look for a trade. As you can see, we are below the 8 and 21 now. It is look like it's rolling over. I got rejected twice on that level right there at 3980, 3975 area in the last Thursday and Friday, sorry. And then it came back down, and it's holding above that key support, which is at that 3900 to 3920 area. It's holding that right now, so it's just consolidating. So next week we'll get our answer. We're going to break down, or we're going to break back up above the 200, right? So if we come down and then holds, it'll be great if it holds this gap area. If it holds this gap area, which is around the 50-day moving average, and then we bounce back up sharply, right? We could do that, bounce back up sharply, retest at 200, and maybe break out, right? If that's the case, then it'll be great. If not, it's coming down, right? It's coming down, and it's going to come down fast to fill this gap. And then after it fills this gap, your key support is right there at 3,700. If that breaks down, it's a long way down, right? It's a really long way down, because if that comes down, we're going to retest the low of the megaphone. That's really low. It's like way down here at 3,000 and 2875. So that's a huge leg down if it does come down. So be very careful on that. Right now we're still day trading. We did some swing trading last week, very small positions. So it when you see opportunities, you can still take them, but just be very cautious and be quick on taking profits and be quicker on taking losses. Right? Because this is a tighter environment we're in, right? So if you're going to swing trade, make sure you follow some very basic risk management rules to stay afloat. Otherwise you're going to lose money in this, right? So as you see, like previously we talked about here, breaking out of here, and we were aiming for this target. Well, that target's been hit. We're coming back down to this level. So on the way down, same thing. The breakout area is your support area. And then once that goes, the next one is down here and then down here, right? So that's the way we're going to play it. The Qs in this box right here above the box is going to go test the 200 and then fill the gap up here, break below the box, gap down here, main support over here. So these are your trades. Anything in between is just going to be back and forth chop, which you probably want to avoid unless you're scalping. And then your real plays are either the break of the box at the upper end or break of the box on the lower end, right? IWM, so IWM create like the multiple top over here. It got rejected. It is kind of like a cup and handle. So if it breaks below this, it's no longer valid. And then you can come back all the way back down to here, right? So we did have this double bottom bounce. That was the key resistance right here to break to go to the next level up. He couldn't do it, so he's coming right back down, and still in a very defined downtrend. It's now back below the 200-day moving average, so most likely he's going to come back and test this 164 if he breaks that 50-day moving average. If not, if he holds, and then we can rally back up and break this high, we're going to go to 200. Mid caps a little bit stronger. Mid caps is really nice bounce off this double bottom. It hit the same thing, that neckline area, and then it got rejected. Right now it's resting right at 200-day moving average. If you can bounce off this level, we can go back to test this 483 and possibly break out of that and then go back into this high demand area, high supply area, right? But if it breaks down, it's likely we can come all the way back down as well. So just keep an eye out on these names. In the mid caps is where the strength is. So a lot of the flow is going to mid cap. We're in the large ones right now. So it's a good idea to go into the mid cap to see what is working, what is not working, and then maybe you can trade off that. Okay, let's do value. Value names looks very much like the mid-cap names, which is holding this market up, and it's rallying so hard off here. Most of it is because of energy names and industrial names. So that's what's making the market rally up this high. It's definitely not the growth names because the FANG names are doing nothing. Like it's just trending down. So as you can see right here, this is your growth names, and it is a horrible chart. Right, it's a defined downtrend, and it's likely to stay that way until it breaks above the 200-day moving average, right? So you can see right there, and then right there, right? So your next leg down can come all the way down to here, before the next bounce, right? So if we don't make a higher high, and break above this channel, it's coming right back down. So be very careful on those growth names right now. If you want to trade, maybe find a value name to trade, because that tends to be where the money's flowing into. And if you trade value names, the options are really horrible on those. It's very widespread because it's not that liquid, and some of it is, some aren't. But it's good to trade with shares, and it's easy to set stop losses with shares. So if you want to trade, maybe go find stuff to trade in the value names that's trending, and then just set a stop in the proper areas. Right. One of the key things to look at is actually Chinese names. It's performing quite well in the past month or so, and I got into some of these names with leap options and shares as well. So I do hold some PDD, BILI, BILI, JD, and NEO and KWEB, which is this ETF right here. So as you can see, we're in a very strong, steep downtrend. We're finally breaking above the 200-day moving average. The moving averages actually start trending up. So what I want to see is a pull back into 200 to retest, holds it, and then break out, right? That will tell me that the money is flowing into Chinese names and it's going back up higher, right? These names tend to go really fast. As you can see right here, it goes really fast, come down just as fast, right? So obviously there's some political risk into buying these names, because if I'm not political point of view, but if China, say, goes to war with Taiwan and actually attacks Taiwan or something, you could expect these names go to like way down, right? So keep a stop in place, allocate very small amount of money to trade this, because if it does work out, you're going to multiply multiple times, right? If even if you trade shares, you get a double on the shares. If you trade leaps, it's probably like 5x, 6x, just by coming back up to here, right? But if you are allocating too much money, then the pullback, if something like that happens, could be substantial. So just make sure you allocate properly when you're trading risk assets. So this to me looks like a basin pattern, and we're coming out. This is the bottom of the cup and handle, right? We're going to form a big giant cup and handle. That's how it's going to get played out, just like this, right? Big sharp down. You get the first rally up, tested 200, fail, came back, rally up above, test 200, and then finally the big breakout, right? So likely this is the same scenario. Right now it's the first time we break above the 200-day moving average, so it's something like this, right? And then you can come back, create a higher low, and then just chop around and then create a higher high, higher low, and then break out, right? So look for that over here. Some of the good names to get into is the ones I mentioned. Bubba's okay if you really want Bubba, but Bubba is kind of targeted right now. Baidu's okay, but I really like JD and like PDD and like Billy. Those three are really good names, Chinese names to go into, because they're taking market share away from Baba. Because Baba's too big in China, and they want to really break them up just like they do in the States, to not allow them to expand and get into everything. So, they have more to lose than everybody else, and the smaller names have more to gain, right? That's why I like to trade these PDD, JD, Billy. These are three really strong e-commerce names in China, especially JD. So I would trade these. I would trade these instead of Baba, right? So and they've been performing pretty well. So if you look at Billy's, look at the volume on Billy, right, coming through. That's a lot of buyers coming through. That's institution money, right? JD, right? A lot of people coming through, rat GD at the bottom, and then look at the big push. There's not as much volume as Billy, but still a really strong push. PDD, right? Giant volumes coming through right here. Big push up after earnings, right? And it's almost hitting the final target, which is up here. So I did take some off already, and I'm probably going to take some more off and then wait for a pullback to go back into it. But as you can see, these are already leading out of the basis already. Higher highs, higher lows, strong volume, right? It's a cup and handle being formed. So the first mini cup is almost set, right? It needs to come back and then a breakout for and then hit these $100 value areas. And these names are highly undervalued, right? Like literally their cash on hand is more than the market cap, meaning they have more cash than it's worth, their stock's worth, which is absolutely crazy, right? That means they're way oversold. And everybody's planning like valuing them like they're going to have a big giant war with Taiwan, which means that everybody's going to not get Chinese products and stuff like that and sanction them or whatever. That's the risk, right? So it's pricing in that risk, and if that doesn't happen and things go back to normal, these names need to go all the way back up to here. That's because that's how much they're worth, right? Not down here. It's like way up there is how much they're worth. So, that's a big kind of risk trade. So, it's not bad to allocate, say, 5% of your entire portfolio into a Chinese name right now, because it's that undervalued, right? Anyways, let's go with the Fang names now. So Fang names, take a look at Apple. Apple is still in this little triangle that we talked about in the last couple of weeks. You want to pay very close attention to what Apple's going to do, because Apple holds a lot of weight on the index. So if the Apple breaks down, likely the market will go with it. If Apple breaks up, likely market goes with it as well. So that's a good name to pay close attention to. This is your key level down here around that 130 area. right? That area absolutely needs to hold. If it doesn't, coming down to 100 area, which is pretty far down, right? AMD, what looked like a cup hand up here actually broke down as they're up to test it to 100. It actually broke down. So if that's the case, if it makes a lower low, this is your key support right here around that 55-60 area. If it breaks below that, it's come down like 40 to 30 area. If it comes down to 40, 30, just back up a truck on it. These names, they're more cyclical, meaning if the economy is good, they boom. If the economy is bad, they drop like flies. So these are very secular names that you can trade when market is strong, right? So when market is really weak, you look for opportunities to buy them cheap and hold them long term. That's how you trade these. So right now it's coming down to the value areas. In open up positions in dollar cost average into a long position and hold for the next 5-10 years to multiply your money substantially, then you can do it that way, right? So these are good for like retirement portfolios, your RSPs, TFSA, stuff like that. So down here, just make sure you buy them in segments. Don't buy them all at once, because even though it's cheap right now, it can get cheaper, which means that you can break that 55, you can come down to 40, and then you can come down to like 30. So I would buy some around that 60 area. I would buy some around that 50 area, maybe a little bit at 40, and then 30 I would buy a lot of it. Right, so that's the way I would trade it. If you are going to trade this, selling puts is the best way to get the best price while earning some income. It doesn't go down that far, so that's the best of both worlds. So it's at a price where you can sell puts on. I wouldn't sell puts up here, but I would sell puts down here, right? So selling puts is a really good way to make some income if it's in the proper condition, also at the proper technical areas, right? So you have to combine that. I know a lot of people like to sell puts, but don't sell puts up here when it's overvalued. You want to sell puts when it's undervalued. You should get them even cheaper, right? Amazon come right back down into value zone right here. You can see this is the peak demand area. It needs to hold this area, because if this area breaks down, it can go really bad, right? It can come down, and then when it's down here, that will become a major resistance. It's going to be very hard to break back through it, right? So if this breaks down, it's going to be very hard to come back up. So you want to see this hold. Absolutely see it hold. And then you can buy some here, and then if it really comes down, you're looking at $50. I don't think it'll come down to that far, but I mean, if it does, buy lots of it and just hold it longer term, because Amazon is going nowheres. Yeah, I literally buy everything off Amazon, and so does a lot of other people. So just when it comes down to these cheap areas, good time to sell some puts, take some shares cheap. And then just like I said, dollar cost averaging. You can do the wheel strategy. You only do those in bull markets, but you can also do them at value areas, because at value areas, what they tend to do is chop around. Whenever it chops around, the wheel strategy is perfect for that, because you can make premium from the call side and the put side while holding the stock for longer term. So think about that, and then trade like that off these levels. Meta. So Meta is looking for that gap fill. There's a target around that 140, and then this is the peak supply zone, which is 160 to 180. That's your final target if it does go up, because most likely if it does go up, you'll run into here and get rejected, right? So to trade that, you could sell some spreads, sell some puts, buy some shares, set a stop. Either way, it'll work. If you buy some shares right here, I would set a stop like just below this consolidation around that 108 area, and then see how it goes. If it does go, you can almost make 50%. If it doesn't go, you lose a few bucks. Right, good risk reward. So if you want to trade that's the way to trade it. There is a very strong supply around this area, that 150 155. So make sure you take profits on the way up. So if you bought one here and then it comes to like say 135 140, right, raise up your stops if you're locking profits, or take partial of your shares off and then raise your stops as well. That way you lock some in as well as ride the rest, right? So that's the way I trade it. Google, the chart is not great. Very strong downtrend. At one of the key demand areas. The key demand areas are actually right down here. So this is one of the key demand areas, and it doesn't hold as much weight as down here. So if it comes down here, get only a small amount of shares right here, and then wait and see if it comes down here. That's where you really want to buy, is down here. Over here you can still nibble at it. Even right here, you can nibble at it. I would sell some puts from, it's trading at 92. I would sell puts 60 days out down here at like 85 to see if you can grab shares. If you can, then it's fine, right? You'll reduce your costs as well. And then if it comes down to right here, just buy some more. Just once you get the puts and you convert them into shares, sell some down here. Also sell some covered calls up here, so you create somewhat of a short strangle around your shares, and then you can take some money, make some income while you wait. Microsoft looks stronger than some other stocks, other FANG names. It is holding quite well at this demand zone. It bounced really good at the demand zone down here. It's now at this area, which is still a pretty good demand zone. You see the volume over here, and then your key resistance up here at the 200, so it's pretty close to that. If you can break above it, it's pretty good. If it breaks above it, you can go test this peak right here, but likely it's going to get rejected off here, just like all the other FANG names, and then maybe a retest and then a breakout later. Netflix almost filled a gap, very tiny little bit of it left, but if you made that trade down here when I say you could fill the gap, you could have made some pretty good money from that area. That's almost like an $80 move. So you had some like call, like leap calls or something like that you would made some pretty good money over there. Even if you sold puts or sold spreads, working towards it, you could make some money. I just made a very small trade on it because it's not a name that I really like to trade. So, you know, I kind of seen this gap fill, but I just made a little bit of money selling like a put spread on it. Anyway, moving on. Nvidia, it hits that 200-day moving average, likely going to get rejected. And what you're looking for is a higher low. So if you actually come down, test that, say 140 and holds, and then rally back up, well, that's a good sign that it could come all the way back up to 196, and then potentially you'll base over here and then go higher, right? This is your highest demand zone right here. You can see we did penetrate it and then bounce back up, right? So that's a really good sign that it was holding that area. If it loses this area, there's really not a lot of support below this, right? There's some like a little bit around that 90 and then all the way down to like 80 to 50 area. If that's the case, that's where if it comes down to here, it's a really good buy. But I don't think it'll come down to here. It most likely flow around up here. So you can get chopped around. Just watch it. Nvidia is a better name in this space. They have a lot higher growth. They also have better graphics cards as well. So, you know, up here is an area that I'm looking at it, but I'm not buying. I'll be looking to buy if it comes down to around that, back down to that 130 now that I know that it held, right? The last time I could have bought it down here, but I didn't. I kind of just did a very short-term trade on it, and then I moved on from it. Because I'm still, I don't really feel comfortable holding anything right now. I like holding cash and just day trade, but last week I did make some very quick swing trades. If I am swing trading, I do them very short term. So I lock in my profits early, and then I get my stops out very early as well. Tesla, this giant head and shoulders is giving me the creeps, because if that thing breaks down, it's coming down low. It's like 150 right here. If it loses 150, it's coming down to 100. If it loses that, it's coming down to like 60. It's a long way down if it breaks down. So the scenario right here is either going to come down, test 140, bounce all the way back up to retest this area, and then if it breaks through it, goes back all the way back up to 240, it can hold and chop around and then go back higher, right? If it doesn't, just come down, hit here 140, may a higher, lower high, go lower, well, it's not going to be good. It can come down really, really fast on that. So just keep an eye out on that. It's right at the neckline. So your target on the downside is like 140, your target on the upside is like 200 and the 220. So there's a little bit of a trade there, but right now I would day trade this, but I wouldn't hold it overnight because there's just too much risk in either direction. Because this stock, when it moves really, really fast, right? So talk about the trade that we had last week was Etsy. So Etsy made really good rally up. So we've seen this base right here. Yeah, broken out of the base with volume on earnings, and then we tested this high right here, which is the low of that area, came back down, retest, and then it went forward to big ride up, right? So we traded this. I sold no, I have calls on this, and I also bought shares on this. So I sold my calls first, locking in almost a double on the calls, and then I raised my stop on my shares, and I took some profits as well. I took some profits around that 15% profit area, and then I raised my stop to that 8% profit area to lock it in, and then I got stop out at that 8%. So I'm out of the trade now. I'm looking to get back in. It actually holds that 120. So if it holds 120 and then start going back up again, so 120, the target would be around that 150 and then 160. So that's the next leg up. So I'm looking for retracement back and then going back into it if the market holds up. If it doesn't hold up, we'll just let it go, because I don't want to go against the market. Even if the stock is still trading up in the bear market, I tend to be a little bit more cautious that way. But anyway, yeah, that's pretty much it for looking at stocks. Let's talk about the agro. So on the agro, let's go start with on Friday. So this is Friday. Right, on Friday, I didn't trade too much on Friday. I don't normally trade on Fridays that much, but I did this pre-market trade. I had this PPI report came flushing down. I didn't get up in time to trade that. I wish I did. It flushed down and hit a major support, which is the previous low on the previous day right there. It hit that, it bounced all the way back up. So on the bounce up, I traded the thick cap bounce right here. So I seen this bounce back up, it consolidate right here. And then as soon as I see this candle, this bull candle at that support, I got in. I was aiming for VWAP. So as soon as it got to VWAP, I got out. I locked in my gains. And then I was done for the day. And then at the end of the day, I went into my small account because I seen this consolidation right here below the VWAP. Once I seen that rejection, I went in for some puts. I actually made 700% on my puts. It was $1.50. It went as high as 9 something on those puts, and I bought also some way out of the money puts for like 30 some cents, and it went up to like a couple bucks. So it was a really, really good trade, but my size was very small, so it's just in my small account. I try not to trade on Friday because I'm usually pretty busy on Fridays, but I didn't mind buying with the small accounts just to play it for fun, since I couldn't watch it. So I just bought it, expected to go to zero. It was like a lotto trade, and then towards the end of the day I closed it off. So that's why I play. But if you use the agro, right? So if you use the agro, it was pre-market sell order right before the drop. It was already in the sell signal, right? So you can see right there, it got a sell signal like pre-market right here. Oh shoot, no, right here. Right, so it came down, and once you flat around right here, you get the buy signal at the open. So you could have bought right at the open for the rally up. When you buy at the open for a rally up, you're pretty well aiming for VWAP, and then aiming for gap fill as well, if it breaks VWAP. So it didn't quite gap filled. Oh, actually, it did gap filled right there. It did gap filled. So if you look at the 5-minute buy signal, you could have ride it all the way up, right? Even on 2-minute, it's too choppy, back and forth, back and forth, back and forth, because these are big waves back and forth, up and down. So ideally, these are great trading scalping scenarios because you're in the uptrend and it's in a big wave up and down. So you could have scalped that quite well. But for those newer traders that don't know how to do any of that stuff, you could have lost money on here because it would have shaken you out, right? So if you were smart, you would have bought them at the lower range, sell them at the higher range of the range, right? Because these are pretty good ranges. It's about $15.50 on SPY means about 15 points on the SPX, which is scalpable, right? You get like a triangle right here, VWAP, stack moving average, and then the breakout. It tested that gap area. It filled the gap area and then went up and tested the previous high, which is right here, the double top right here, and then got rejected, right? So if you know how to use support and resistance, these were predictable areas to get out, right? Because it's hitting those previous day's highs and got rejected, right? Once you see a rejection previous day highs, you look for the sell signal. It came through, so you could have shorted it on the way down with that sell signal and then ride it. And there was no buy signal, literally. It went to a sell signal all the way to close. Use the 5-minute. Now the 2-minute was a bit choppy. So what you do with 2-minute is you're only looking to short when a sell signal come through, because the 5-minute in a sell signal. So you could have shorted here, right, and then shorted here, and then shorted here. You would have made a lot of money right here on the short into close, and you could have made some money right here in this short. So to trade these, you have to really understand some technicals to make money in these choppy sessions, and you really have to follow the rules that's set with the training video, which we did. So there's 2 training videos right now. The first one is the shows you how the algo works and how to trade it. The second training video I did was last week. I forgot that it was a free session and actually gave out a lot of secrets, trade secrets that I do, that I teach in the course. And I actually gave out about 1/3 of the course in that session for free. So if you guys really wanted to watch it, just sign up for the monthly subscription. It'll be up until the end of the month. On January 1st, I will be taking it off, so take advantage of it. It's $288 Canadian for the month, so you're getting a lot of value just by watching that video. So I would go in, watch that video, and then learn how to trade. You also get the aggro for the month as well, so practice with the aggro. Learn what is taught in that video to trade the aggro and see if you can make some money off of it, right? So if you can make like your 288 back just by using the aggro, right? Why not? It's pretty risk-free if that's the case, right? And anyways, with the algo, like I said, they work great on trending days. They do not work in choppy days. This is more like a chop trend. So if you were following like buy, sell, buy, sell, buy, sell, buy, sell on every single buy, sell, you're not going to make money, right? Because even in this, like you can see the moving averages, they're back and forth, back and forth, back and forth, which means that you'll get stopped out and you go back in at the same area. You're going to lose money on that type of trading. But if you understand support and resistance and you know which levels to buy, which levels to get out when it's in the range, right? Like we talked about in the video, we don't really trade consolidations with the algo. If the range is very tight, you just avoid it. And also after the first 2 hours, if it's not trending, you don't trade it anymore. You wait till it sets up a trend, right? So if you follow the basic rules outlined in the training, then you can make money off of it. But if you're just going in there blindly, looking to buy and sell every single signal, then obviously in those choppy sessions, you won't lose money. So, and they perform really, really well in a trending day. But in a choppy day, they don't perform that well unless you know what you're doing. You can, like, if you're a scalper, you can still trade those using the algo, going into a smaller time frame to trade those. But those require experience, right? If you do not have the experience to do that, then you can't make money in that chop, right? So this is Thursday. Thursday, we have a double top type pattern, right? We're at the open. We got the buy signal from the 2-minute and the 5-minute. We rallied up to the top. right? If you understand this, this is a key level to test, which is a previous level from before. 397.50. We do market updates every morning with the levels, and that was one of the levels to watch out for. So as soon as we hit that level, you see we get this rejection hammer right there. We get a bunch of dojis over here, and you also got a bunch of warnings over here. These yellow dots are early exit warnings. So if you bought down here, these early exit warnings telling you get out of the stock at least half, right? So usually when I see these dots, I get out half, and then I get the next dot, half of my half, and then once I get the sell signal, I'm all out. That's how I trade it, right? So right here, you would have been all out as soon as it broke right here, right? And because it was a consolidation with like a head and shoulder type of pattern, you could actually short this and then aim for VWAP, right? So if you short that, aim for VWAP, you would have made some money. You would exit it right there, right? So if you understand how to trade that, you could have made some money on the short side as well. And then over here, it made like a double bottom as support, and then it bounced off that level. So at that double bottom, there was a buy signal right here, right? Also right here. So we can see the 5-minute double bottom buy signal, and then it rally up. Where's your target? Right? Right over here at the previous top. So if you weren't greedy, you would choke your exit at the previous top. There's also a sell warning right over here with the yellow dot, right? There's a little consolidation sell warning right here. But if you understand that if you got out, you can go back in because it was still in the buy signal on the 5-minute. So as soon as the buy signal come in, you could go back in because that was a support level. It's a VWAP support. Also, all the moving averages were stacked right there. And it was in like a following wedge. So that once it breaks out, you can play it, right? So you could have traded that. And then up here, again, a double top, shorting opportunity on the double top because you got sell sign on 2-minute, sell sign on the 5-minute. Also breaking down the consolidation top right here. So you could have choked the short either this candle or this candle and aim for VWAP, right? So you could have got a trade right there, and then you could aim for this low once again. Once VWAP is broken, you could aim for here. So you could have got a trade from there down to here, and then another trade from here to here, right? So the algo didn't tell you to sell on the way down. So what I normally do is I exit half, and then I let the half ride if I really want to pattern trade it, or I scalp per candle, meaning I exit right here, see a green candle, I exit as soon as it breaks a green candle, re-enter down here, green candle, exit, break green candle, re-enter, and then trade it candle by candle, scalping it. That's why I trade, because I can't I don't have the personality to hold things too long. So it's one of my trading weaknesses, but I know my own personality. I know how to trade with my personality. So that's the way I trade with it. But majority of people, they short right here, they hold it all the way down here. Simple. Because they follow the algo, right? And understand once it breaks down, it tends to test a key support area, which is first one is that VWAP, second one's right there, right? So as long as you manage your trade, you can make some money off that trade. Now let's go back to Wednesday. So this is a little bit more difficult day to trade because it's a very small consolidation, but it has these big peaks, right? When you have big peaks, you can make money with big peaks, right? So on the 2-minute, right, you got buy signal right at pre-market. So right at the open was a buy. So you ran up. You were looking for 395 at that day because that was a key resistance area. It's also pre-market high right here, right? So as long as you know that level, and I give this level out every day, like I said, in the market updates, and then that's what you aim for. So at the open, we go for a long. We aim for 395. We got 395. We got rejected, right? And then right here, you could have got a sell signal right here. Was it right here? You could have got a sell signal. You could have shorted it, right? Shorted it down to VWAP, right? Again, down to VWAP, and then aim for the low at the open, right? So that's the two targets on the way down. And then as soon as you got down here, you can see that it trended back up. You don't really get a buy signal till over here. To buy on the 2-minute, right? Which is around right here. So you could have traded that. And then you got your sell signal somewhere around right here, right? But in between, it was just chop, right? You could have lost some money if you were you got weak hands. But I mean, if I was to trade this after 2 large candles, I move on my stop or I take some profits off if I'm trading options. If I'm trading shares, I move up my stops, right? So you could lock in some profits, and then right here, when the second peak, you were aiming for this high, 395 area. So whenever down it was holding VWAP, I would aim for 395, and then VWAP aim for 395. You could have made some money, right? So you have to be smart with the type of trade that you do. And then if you understand that this was a key resistance and we failed a few times, right here is your money maker right here, right? After that big red candle right here broke the consolidation top, you take the short on the sell signal right here. Also, sales signal shortly after on a 5-minute. Aim for VWAP and then aim for the low of the day, which is right here. So you made some money from here to VWAP, and that VWAP, it did not hold. It just went flush right through it. So you were sold half right here, right, the other half down to the bottom. And you could have locked in there a big gain for the day, right? So in between, you could lose some money because after the first 2 hours, it's going to chop around because that's usually when everybody goes out for lunch, and algos take control. So when algos take control, they take your money. So that's why I always tell people to trade the first hour, maximum 2 hours, and then in the afternoon, unless there's a very obvious setup, don't trade it. Right. And then on this setup right here, it was pretty obvious on the short. So, that's where you would have made the money. If you were patient, you would have made a lot of money right here. You would have made some money at the open, and then the short right afterwards, because a bunch of dojis extended into the clouds with flags, right? That's fairly warning of a reversal. So, you could have caught that. You could have possibly caught this, right? This is the buy signal right here, and buy signal on 5. So when you see confluence, then you can buy at that area and then aim for this and then sell it down, right? So, even though these are really hard trading days, as long as if you were a good trader, you understand the rules of trading, you can still make money trading these type of chop, right? Because not every day is as easy as this, because this day right here, you would have made enough money for an entire week, right? It broke down the pre-market low right at the open, and they just kept going and going and going. The algo did not tell you to sell till like right there. It gave you a buy signal, which is the exit, but the 5-minute did not give you a sell signal, right? So every single time down here, whenever you get a sell signal, you just short it, and then you could have ride it right here. This sell signal right here would have gave you the long ride down, is when you broke the consolidation right here, and then ride it all the way down, right? So these are the days that you look for, is the trending days. Those choppy days, if you understand levels and understand how to trade consolidations, if you don't understand it, just avoid those days to trade, right? And just look for these trending days, because you don't have to trade every single day, right? If you can make money when it's trending and then avoid the choppy days, you're going to make money overall. You're going to make a lot of money overall, right? So obviously the people that can't make money, they're over trading and they're not looking for high probability trades. They're just going with every single signal that they see, which obviously will not work in a choppy environment, right? So if you want to make money with this algo, like I said, we have training videos, we have rules to follow. As long as you follow the rules, you can make money. All right. Talk to you guys later. Make sure you like, subscribe. See you guys next week.